Welcome back everyone. In this video, we're going to talk about Seatrium. Alright, the big news of how the old Sembcorp Marine is making the way into the STI Index on 19 June 2023. As many of y'all have already know, Seatrium is replacing Keppel DC REIT, given the larger market cap of around 8 plus billion compared to the REITs of only 3.6 billion. Alright. This news has sent shockwaves through the investment community, given that there's renewed interest of how Citron stock is in such a bad shape, and now it is going into so-called the blue chip zone. All right, so now let's take a closer look at this stock and analyze what this means for the company and for you as the investor. Okay, first, let's talk about the inclusion into STI Index. There's this so-called index effect. All right, so there are two STI ETFs, SPDR STI ETF and Nikko AM STI ETF that is tracking the index at the moment. So this means that there's more than 2 billion AUM that needs to follow the index movement. And we haven't even include other funds that are buying STI Index too. Hence, when STI Index adds a new company, into the roster, all these funds have to buy shares of that particular stock. And this buying can send the stock price up to a certain degree. This is a big win for Citron because it so-called removed their small cap status and put them into the blue chip zone. At this point in time, I got a confession to make. I've been making a lot of local stocks analysis videos in the past few months and not sure whether I should continue with it or go for US stocks to capture a larger crowd to boost my channel. So if you're able to help me out, right, do leave a comment down below whether you prefer local stocks or US stocks. And at the same time, don't forget to leave us a like and subscribe to the channel to be a part of this. Not to forget our beloved financial meme. Okay, so now let's come back to the video. Next up is the CPIB investigation into Seatrium just a day before it got included into the STI Index. Seatrium has provided an update that investigations are ongoing and there are no formal charges pressed against any of the key executives. Personally, I don't think it's going to be a deal breaker or anything, especially since the investigations dates back all the way before 2015, 8 years ago. At most, it's just gonna be a big fine. No big deal here, since Citron has all the right things going for it now. Which brings us to the third point. They are increasing order book. So third, right, Citron investors are rejoicing right now, given that the firms have been, getting new orders, and the order book has already hit a 20 billion, net order book. On the other hand, investors need to take note of the business review to be wrapped up by the end of the year. So the CEO sound off that there's a share consolidation exercise that may take place given the very high base of outstanding. Assuming they do a 10-to-1 share consolidation exercise, the share price will change from 12 cents to $1.20. Not as attractive for those punters or BBs to come in and play, right? Okay, then the last point that I want to share is about their analyst consensus. So given that the company is losing money and has on and off, been losing money in the past decade, we can't really look into the valuations by PE ratio because it doesn't make any sense. So I took a quick look at the average of 8 analyst ratings right now. Their average 1-year target price is 15.6 cents, giving a potential 23% upside in 1 year. Alright, more importantly, the brown line that you see in this picture here depicts the analyst ratings. It shows that the worst for the company is probably over and Citron is turning the tide once again. Then if you find this video helpful for you, I would appreciate if you can help me to tap the like button and subscribe to my YouTube channel for more stocks analysis or investor education videos. Next, if you want to learn how to choose the right dividend stock, you need to check out this video over here. and I will see you next time. Thanks for watching and ciao.